Welcome to our video on APR, or annual percentage rate, and how it affects your credit card. If you've ever wondered what APR means or how your credit card interest is calculated, you're in the right place. We'll break down the basics, explain key concepts, and show you how to manage your credit card debt more effectively. Understanding APR is essential for making smart financial decisions and avoiding unnecessary costs. Let's start by exploring what APR actually stands for and why it's important for every credit card holder. APR stands for Annual Percentage Rate. It represents the yearly cost of borrowing money on your credit card, including interest and certain fees. When you use your credit card and carry a balance, the APR determines how much interest you'll pay over time. Unlike simple interest rates, APR gives you a more comprehensive view of the true cost of borrowing. This makes it easier to compare different credit card offers and understand what you'll actually pay if you don't pay off your balance in full each month. APR is important because it directly impacts how much you pay in interest if you carry a balance on your credit card. A higher APR means you'll pay more in interest, while a lower APR can save you money. Knowing your card's APR helps you make informed decisions about spending, payments, and choosing the right card for your needs. By understanding APR, you can avoid costly mistakes and manage your finances more effectively. Let's look at how APR is applied to your credit card balance. Credit cards can have several types of APR, including purchase APR, balance transfer APR, and cash advance APR. Each type applies to different transactions. Purchase APR is the rate you pay on everyday purchases. Balance transfer APR applies when you move debt from one card to another. Cash advance APR is usually higher and applies when you withdraw cash using your card. Understanding these types helps you know which transactions cost more and how to avoid high interest charges. Credit cards may offer either fixed or variable APRs. A fixed APR stays the same over time, making it easier to predict your interest costs. A variable APR, on the other hand, can change based on market conditions, such as the prime rate. Most credit cards today have variable APRs, which means your interest rate could go up or down. Knowing which type your card uses helps you plan for potential changes in your monthly payments. Credit card issuers determine your APR based on several factors, including your credit score, payment history, and the type of card you apply for. If you have a high credit score, you may qualify for a lower APR. If your credit is less than perfect, your APR will likely be higher. Issuers also consider market rates and their own policies. Understanding how APR is set can help you improve your credit and qualify for better rates. Many credit cards offer introductory APR deals, such as 0% APR for a limited time on purchases or balance transfers. These offers can help you save money if you plan to make a big purchase or transfer debt. However, once the introductory period ends, the regular APR applies. It's important to read the fine print and understand when the promotional rate expires so you don't get caught off guard by higher interest charges. If you miss payments or violate your card's terms, you may be charged a penalty APR. This rate is usually much higher than your regular APR and can significantly increase your interest costs. Penalty APRs are designed to encourage responsible use and timely payments. To avoid penalty APR, always pay at least the minimum amount due and follow your card's terms and conditions. Interest on your credit card is calculated using your APR and your daily balance. Most cards use the average daily balance method. This means your balance is tracked each day, and interest is applied based on the average amount you owe. The APR is divided by 365 to get the daily rate, which is then multiplied by your daily balance. Understanding this calculation helps you see how carrying a balance can quickly add up to significant interest charges. Let's look at a simple example. Suppose your credit card has an APR of 18%, and you carry a balance of $1,000. The daily rate is 18% divided by 365, which is about 0.049%. Multiply this by your daily balance to get the daily interest charge. Over a month, these daily charges add up, and you'll pay interest on any balance you carry. This example shows how even a moderate APR can result in significant interest if you don't pay off your balance. Credit card interest is usually compounded daily. This means each day's interest is added to your balance, and the next day's interest is calculated on the new, higher amount. Compounding can make your debt grow faster if you don't pay off your balance. Understanding compounding helps you see why it's important to pay down your debt quickly and avoid carrying a balance whenever possible. Most credit cards offer a grace period, which is the time between your purchase and when interest starts accruing. If you pay your balance in full by the due date, you won't pay any interest on purchases. However, if you carry a balance, the grace period disappears and interest starts accumulating immediately. Knowing about the grace period can help you avoid unnecessary interest charges. Making only the minimum payment on your credit card can lead to paying more interest over time. The minimum payment is usually a small percentage of your balance, and the rest accrues interest. This can make it harder to pay off your debt and increase your total costs. It's always better to pay more than the minimum whenever possible to reduce your interest charges and pay off your balance faster. APR and interest rate are related but not identical. The interest rate is the cost of borrowing, while APR includes additional fees and gives a more complete picture of what you'll pay. When comparing credit cards, always look at the APR, not just the interest rate, to understand the true cost of borrowing. This helps you make better decisions and avoid hidden charges. You can find your credit card's APR on your monthly statement, in your cardholder agreement, or by logging into your online account. It's important to know your APR so you can manage your payments and avoid surprises. If your APR changes, your issuer will notify you, so keep an eye on your statements for updates. Credit card issuers are required by law to disclose the APR and other key terms before you apply. This helps you compare offers and make informed choices. The Truth in Lending Act ensures transparency, so you know exactly what you're signing up for. Always review the APR and terms before accepting a new card. Your credit score plays a major role in determining your APR. Higher scores usually qualify for lower APRs, while lower scores may result in higher rates. Improving your credit score by paying bills on time, reducing debt, and checking your credit report can help you get better APR offers. This is one of the best ways to save money on interest. Different types of credit cards have different APRs. Rewards cards, secured cards, and student cards may all have varying rates. Rewards cards often have higher APRs, while secured cards may offer lower rates if you have a deposit. Knowing the APR for your card type helps you choose the best option for your needs and spending habits. APR doesn't include all fees, such as annual fees, late fees, or cash advance fees. These extra charges can increase your total cost of borrowing. Always check your card's fee schedule and factor these costs into your decision. Understanding both APR and fees gives you a complete picture of your card's costs. Balance transfer APR is the rate you pay when moving debt from one card to another. Many cards offer low or 0% APR for balance transfers, but fees may apply. After the promotional period, the regular APR kicks in. Balance transfers can help you save money, but it's important to understand the terms and fees involved. Cash advance APR is usually higher than purchase APR. When you withdraw cash using your credit card, interest starts accruing immediately, and there is no grace period. Cash advances also often come with additional fees. It's best to avoid cash advances unless absolutely necessary due to their high costs. Promotional APR offers can help you save money for a limited time. These offers may apply to purchases, balance transfers, or both. Always check the terms, including how long the promotional rate lasts and what happens when it ends. Understanding promotional APRs helps you take advantage of deals without getting caught by higher rates later. The timing of your payments affects how much interest you pay. Making payments early can reduce your average daily balance and lower your interest charges. Late payments can trigger penalty APRs and increase your costs. Always pay on time and consider paying early to minimize interest. Managing your credit card debt is easier when you understand APR. Paying off high APR cards first can save you money. Consider consolidating debt or transferring balances to lower APR cards. Always make a plan to pay down your debt and avoid carrying balances whenever possible. APR is a key factor in your financial planning. Knowing your APR helps you budget for payments, avoid unnecessary interest, and make smarter spending choices. Review your cards regularly and look for opportunities to lower your APR or pay off balances faster. Good financial planning starts with understanding your borrowing costs. When shopping for a new credit card, compare APRs and other terms. Look for cards with low APRs, especially if you plan to carry a balance. Consider rewards, fees, and introductory offers, but always prioritize the APR. Comparing cards helps you find the best deal and avoid costly mistakes. Your cardholder agreement contains important information about your APR, fees, and terms. Always read this document carefully before using your card. If you have questions, contact your issuer for clarification. Understanding your agreement helps you avoid surprises and manage your card responsibly. Many online tools and calculators can help you understand your APR and estimate interest charges. Use these resources to plan payments, compare cards, and see how different APRs affect your costs. Online tools make it easier to manage your credit card debt and make informed decisions. Developing a payment strategy is essential for managing APR and reducing interest. Consider paying off high APR cards first, making extra payments, or consolidating debt. Setting up automatic payments can help you avoid late fees and penalty APRs. A good payment strategy can save you money and improve your financial health. Rewards cards often have higher APRs, so it's important to pay off your balance in full each month to avoid interest charges. If you carry a balance, the rewards may not outweigh the extra interest costs. Always consider the APR when choosing a rewards card and use it responsibly to maximize benefits. Secured credit cards are designed for people with limited or poor credit. They require a deposit, which can help lower the APR. Using a secured card responsibly can help you build credit and qualify for better APRs in the future. Always check the APR and terms before applying for a secured card. Student credit cards are designed for young adults and often have higher APRs. These cards help students build credit, but it's important to pay off balances in full to avoid high interest charges. Compare APRs and terms before choosing a student card and use it responsibly to establish good credit habits. How you use your credit card affects your APR and interest charges. Carrying a balance, missing payments, or taking cash advances can increase your costs. Using your card responsibly, paying in full, and avoiding unnecessary fees helps you keep your APR low and save money. Your monthly credit card statement shows your APR, balance, minimum payment, and interest charges. Reviewing your statement helps you track your spending, payments, and interest costs. Always check your statement for errors and contact your issuer if you have questions. Reading credit card reviews can help you compare APRs, fees, rewards, and other features. Look for reviews from trusted sources and pay attention to user experiences. Comparing reviews helps you find the best card for your needs and avoid cards with high APRs or hidden fees. Comparing credit cards is the best way to find a low APR and save money. Use comparison websites, calculators, and reviews to evaluate your options. Look for cards with low APRs, reasonable fees, and good rewards. Making an informed choice helps you avoid costly mistakes and manage your debt effectively. Credit card offers often highlight APR, rewards, and promotional rates. Always read the terms carefully and compare offers before applying. Look for cards with low APRs and features that match your needs. Understanding offers helps you avoid high-interest cards and find the best deal. When you apply for a credit card, your APR is determined by your credit score, income, and other factors. Approval doesn't guarantee the lowest APR, so always check your offer before accepting. Improving your credit can help you qualify for better APRs in the future. Your credit card limit can affect your APR and interest charges. Higher limits may help you qualify for lower APRs, but carrying a high balance can increase your costs. Always use your card responsibly and avoid maxing out your limit to keep your APR and interest charges manageable. High APRs can make credit card debt expensive and hard to pay off. Focus on paying down high APR cards first and avoid carrying balances whenever possible. Consider consolidating debt or transferring balances to lower APR cards to save money and reduce your interest charges. Some credit cards offer benefits like rewards, insurance, or travel perks. These features can be valuable, but always consider the APR and fees. If you carry a balance, the interest may outweigh the benefits. Choose cards with features you'll use and a manageable APR. Security features like fraud protection and alerts are important, but they don't affect your APR. Always use secure cards and monitor your account for suspicious activity. Protecting your card helps you avoid fraud, but managing your APR helps you avoid high interest charges. To manage your APR and interest charges, pay your balance in full each month, avoid cash advances, and use your card responsibly. Set up alerts and automatic payments to avoid late fees and penalty APRs. These tips help you keep your costs low and make the most of your credit card. Educating yourself about APR, fees, and credit card terms is the best way to avoid costly mistakes. Use resources like videos, articles, and calculators to learn more. The more you know, the better you can manage your credit card and save money on interest. In summary, APR is a crucial factor in understanding your credit card costs. It affects how much interest you pay, how you manage your debt, and which card is best for you. Always check your APR, compare offers, and use your card responsibly. By understanding APR and how interest is calculated, you can make smarter financial decisions and avoid unnecessary costs. Thanks for watching, and remember, knowledge is power when it comes to credit cards.